Hey guys, I want to. I made some major changes today. Um, I don't really like to be making huge changes that often, but um, AMR. This is one of Mosh Pabreri, one of his biggest holdings. Um, if you'd have got in like prior to the pandemic and this thing, I mean, this is a hundred bagger. Um, this stock was trading at over $400 last year, and this is a bet on coal, which I've made some videos on this before, where coal is a hated industry right now. It Just as a side note, real quick, if anyone's a Harley fan, I mean, Hog is dirt cheap right now. They got earnings, they got a dividend, they got low PE. And it's been basically cut in a third from its highs. I think some of that has to do with the trade war going on. But I don't have the graphs to prove my point here. But basically, coal, even though it's an old and dying industry, blah blah blah, the consumption of coal actually goes up every year. So regardless of whether Biden hates coal and they want a Green New Deal, coal is still relevant, and it's not quite at the 52-week low. It's at 125, but it's a long ways from 400. So even though this thing has gone up probably 100 times, they still got a low PE. They still got really high earnings. They pay a really tiny dividend, but I do think that at some point this thing will maybe not go back to 400, but I don't know. I think it's going to go higher. I think it's going to, even here it says the 1 year target estimate is 272. And oil prices, coal prices right now are really low. But
what if you can install this dead simple trading system and start making $200 to $700 a day?
Monish Pabrai manages over $900 million invested in 10 stocks and hit high.
But one thing I wanted to say, I was looking for this console energy thing, and I realized that they had merged in January. And they created this company called CNR. So, and this thing's actually kind of near its 52-week low. And they just merged in January, I believe, and they're down quite substantially. And another billionaire, David Einhorn, is heavily invested in CNR. But basically, Consol Energy in January, Consol Energy and Art Resources merged to create Core Natural Resources. And part of Pobras portfolio was in this company. But this one is the one that I bought. And now this is his U.S. portfolio. This isn't his overall portfolio because he's heavily invested in a couple companies in Turkey right now. But yeah, a big chunk of his portfolio is in AMR. So anyway, I stuck $7,000 almost, 25% of my portfolio, and that I still got Echo Petrol, which I don't really love that much. I love the dividend, the 20% dividend yield. I don't like this PE. I was debating whether or not to maybe sell this piece and maybe jump on the CNR bandwagon, since CNR seems to be low right now. I mean, not low historically, but that's one to watch. Maybe if CNR drops a little more, I do hate to lose the 20% dividend yield. But yeah, I do think that sometime in the future, this one will go from 125 closer to 400. Which will give me a chance to double up or triple up or maybe even quadruple up. I still like Vail for the dividends. Maine has gone up a lot, but I'm still holding it. This waste company has done really well. PBR really liked still. It's still really cheap. This says 12%. Usually it's 20, but they might have dropped it. But it's still got a low PE. They still got earnings. Still above 10% dividend yield. Vail, low PE, still got earnings, still got a high dividend yield. And I like that the iron ore. I really like oil and gas right now. So I like Petrobras because of that. This one is another play on the oil and gas industry. One stock that I did have that used to be a monthly payer. This is not. This is more natural gas, but it had dropped, I think, all the way down to 2 or something. It had dropped down really low. it was like at 15 or so a couple years ago, or hovering around 15. But they stopped paying their dividends. But one thing they did do is so they're not paying any dividends right now, as far as I know. But they have been buying assets. So in the future, hopefully, it maybe will start paying dividends again. But maybe in another account, maybe in another brokerage, maybe I'll take a stab back at this one. But and then I just got a lot of 1%ers here, where and I made this portfolio or tweaked this portfolio probably within an hour this morning, early this morning. I just got some Google, I got Oracle, I got Berkshire Hathaway. All of these I think are very overpriced. Not I hate to say that because, well, before when I was going to buy Berkshire it was 200. Now it's probably closer to 600. But they got a lot of cash. So if the market tanks, something bad happens, they have $300 billion to buy other businesses. They have a lot of cash there to turn $1 into $2, $1 into $3, whatever. And I just got 1% allocation to all these. I got JEPI, which is a monthly payer, the JP Morgan Equity Premium Dividend. I got the equal weight S&P 500. I got physical silver. This is an interesting ETF called DIVB, which basically is a dividend and buyback ETF. So if the companies have dividends plus they're doing buybacks, it is buying those. And one reason Pabrai or whatever liked the company that was this one, and then also the AMR, was they were doing something like 16% buybacks every year. So even though they weren't paying a big dividend, they were doing share buybacks, which basically increases your ownership in the company without you ever spending another penny. And I got Phillips 66, I got the Schwab dividend ETF, I got BP, I got Shell, I got Oxy, I got Exxon Mobil, I got Chevron, and I got the long-term treasury. But I only got 1% of these, so if something happens, and I got 15% allocation here that I could swap up, and then if I had to, I'd probably get rid of Echo of this one, just because I know more about PBR, and PBR has a lower multiple. I do know Vail has a lot of debt as well, but anyway, like I said, I just recently changed my portfolio last week, and here I am doing another change. But I just kind of saw this news. I don't really pay attention to the markets day in and day out, just because I don't want to be too heavily influenced in my decisions. But when coal is near like an all-time low, and this stock is basically a fourth of what it was, and I don't even know if this market cap is correct. It might be, but they could easily do $1 billion in buybacks. And you can see the market cap of this company not long ago, exactly a year ago today, was basically almost $3 billion higher than it is currently. It's trading right at a book value of 1. They couldn't do $1 billion in buybacks, but they do got $500,000 in cash. Total cash per share $36. So out of this 125, $36 of that is cash. Yeah, I think this is way undervalued. I think this is just a screaming buy me, buy me, buy me. The reason it went down was basically their margins were 30% and went down to 6%, but coal's at an all-time low right now. It fell to $97 per ton in March, a 4-year lowest in 4 years. And you see what the low is and see what the high is. So the highest was 457 and the lowest is 48. And we're at 100. So yeah, it could fall down to 48 again. It could even go lower than 48. But in my estimation, the chances of it going closer to 457 are better than it falling down to 48 again. I have no idea what I'm about to look at, but I'm just gonna scroll through it. I don't know which site I saw it at, but basically there's a chart somewhere that shows that. Oh, here it is, right here. Here's one of them. All right, so oil is on the bottom. Natural gas is right here. Here's coal. I mean, you can see, and this is a 20-year chart, that the consumption of coal has basically gone up over time. and I think it's kind of cheap right now. So even though coal is still a dying and hated industry, I think you can still get very rich off of coal. So that is the reason why I'm putting a 25% stake in this particular company. This one I'm just happy to get the dividends, and maybe the earnings will catch up to his PE, and Vail, very low PE, good dividends. Maine, good dividends, of course, has gone up a lot since I bought it. I bought it in the 40s, and now it's closer to 60. It says 5%, but because of where I bought it at, I'm probably 8 or 9 maybe, or at least 7, 8, somewhere around there. Petrobras, even if they cut their dividend to 12, still a really high dividend. They're still make a lot of money. I don't particularly like a lot of the policies in Brazil, maybe, but this company, I've done well on this one. It's still got a low PE, still got positive earnings, still has a I love the industry it's in. It's basically a waste, water and waste management company. I'm very happy with that, and the reason I had bought that one reason is that they were rumored to be being bought out at some point. It has not happened yet, but maybe some point in the future. And this one, even though it doesn't even have a PE here, but this is basically a company that does revenues that derived from royalty payments. So it only has 29 employees, but I really like dividends, and I think I'm not looking for it to double or triple. I'm just happy to get steady dividends, and yeah, I wanted a little exposure to some. I mean, of course, I only got like a couple shares or half a share or whatever. Some of these, like Berkshire Hathaway, got half a share. But like I said, I made this portfolio. I tweaked it within about 30 minutes because I was trying to get in by the 6:30 trade thing this morning. I'm still up a little bit. I'm not up much. I mean, the last time I looked at, after I tweaked my portfolio, it was at 28, and it has fallen down a little bit since then. But hopefully we can make some money with this AMR. And this is my dividend income this year so far. And in March I got 300 from Vail, KBR, and Petrobras. But anyway, I just wanted to make a quick video and show you some of my big changes, and hopefully we can maybe double or at least double this hopefully this one will double or triple sometime in the future. That's my big bet, and hopefully outside of that, I'm just hoping to get some steady dividends and maybe a little bit of price appreciation. You know, these might go down. I don't know, but you know, I think oil and gas is a good place to be right now, and they make a lot of money and they pay a lot of dividends. All right. Thanks, guys.